Right, okay, so I'm going to blow your mind with technical analysis in this video. I'm going to start off with pure raw data. I don't even know what's on this chart, but we're going to build in, and we're going to build in Fibonacci extensions, Fibonacci retracements. We're going to look at the indicators, and then overall, by the end of the video, you follow along with me. I want to try and get a thesis as to whether this is bullish, whether this is bearish, how to protect yourself, and where extensions would lie. Right, let's get the introductions out of the way. I'm Keith, this is Crypto Bullseye, and every single one of you guys is welcome to this channel at any time. This one's a request from for Dogecoin from Purple Rain, so a big thank you for that. This video is dedicated to you. I'm going to be actually going through more and more of these comments during the videos because I think it's going to be important for us to start interacting together as a community. We've all got different mindsets, we've all got different thoughts, we've all got different time horizons, and we all interpret things different. So the more that we act together as a community, the more we'll be on the same page. So I am going to start doing that, guys. And if there's any suggestions from you that you'd like me to start doing differently, let me know, because ultimately I'm here to help you guys. The more people that I can help during the course of this bull run, the more chance that we've got as a successful community, the more hard work I promise I will put in. So Dogecoin, first of all, we're going to start with the TA. We've got raw TA on here. We've got absolutely nothing to go by. I've done that for a reason, because we're going to build in ourselves and then try and get an idea at the end of the video whether Dogecoin's bullish, whether Dogecoin's bearish, how you can protect yourself, and where extensions could lie. So the first thing that I'm going to do, guys, a little bit differently from usual, because I'm using a fib retracement tool here to measure an extension. What I'm doing is I'm measuring it from this high to this low. What do you see? Retracement levels. So what we want to do is double click on your Fibonacci tool. And when you're looking for extensions, guys, what are the magic numbers? Remember, the 1618 and the 2618. So we're going to go for the 1618, and then we're going to go for the 2618. We're going to see where this thing leaves us. So let's just change that to white. 1618. Right. Straight away, look. So this is the first thing that we've done. We've got a 2618. Now, usually things don't fly straight to the 2618 in one swing. Dogecoin has absolutely smashed it. So it's hit the 2618, it's hit a barrier at the 2618, and we've had a pullback. Where have we had a pullback to, guys? The 1618, the next golden number. So you've got the 2618 here and the 1618. What's that creating? That's creating a range of support and resistance. What does that allow for when you've got a range of support and resistance? Firstly, it allows for tight stop losses. Secondly, it allows for good risk to reward. So if you're at support here and you're shooting for this resistance where it's already acted as resistance, and then you're protecting yourself below the low, that's a 7.73 risk to reward. There is an elephant in the room here, guys. This is the elephant in the room, this wick here, because this wick told a story, and that wick told a story which was, at some point, the bears had pushed price all the way down to this level, i.e. way below the 1618, and the bulls had pushed price all the way back by the end of the day. And then you started trading upwards. So that is an actual bullish candle, but that's an elephant in the room, because why? If you're protecting yourself below the previous swing low, you need to factor that in. A 2.3 risk to reward. A 2.3 risk to reward isn't bad. However, if this wick wasn't there, it's all hypothetical, guys. Look at as many charts as you can. These things play out differently. So if you're at strong support, you haven't got one of those nasty wicks, you can reduce your risk to reward. And that's the aim of the game, is reducing your risk to reward. Because if you're risking here 6%, so you're putting $100 in and you're risking 6%. We know what the downside is. Downside's here. This was the previous resistance level. This was the previous sticking point. That's sat at 22 cents. That's your downside. So if this played out and we were wrong, remember, guys, we are wrong. It's probabilities game. A probabilities game means that you're wrong, but you need to be you need to be right more times than when you're wrong, and you need to have a higher risk to reward. So if, for example, this dropped through support, dropped through support, and we got stopped out here with 6, 7, 8% loss, and then price dropped all the way down to the next resistance point here. That means first and foremost that you've retained about 22% of the capital that you would have lost if it went all the way down here. But it means that you're out with around about 5, as an example, 6, 4, whatever it is. You're out with the minimum amount of capital at risk. Then when it goes down here, guess what, guys? That's 22 cents. Where was your stop loss? 32 cents. If you entered here, what would that do? give you a higher probability of being more successful than what you would have on the initial trade. So using stop losses, guys, you can use stop losses to your advantage, because if you stopped out and it pulls back down to another level, that next level is the next level of support. Guess what? Indicators have probably reset as it's pulled back. You've protected yourself with a minimum amount of capital. Drop 25, 30, 40%. That means you enter 25, 30, 40% cheaper. What does that mean, guys? 20, 30, 40% gains just to where it went before. And you're out with the limited amount of capital. So that's why we talk about risk to reward. Now, let's get rid of that. That's hypothetical. That's what we need to do to hold. Next thing that I'm going to be doing is Fibonacci retracement tool from its all-time high back to its bear market low. Back to its bear market low. Right. Okay. This is where Fibonacci is magic. So there's the top. There's the bottom. What number have we got here? Golden 618. So this is the golden 618% retracement from its previous bull market high to its bear market low. What is that? That's the 2618 extension from this previous move all the way here. Now, where did we pull back to? We pulled back to the 1618 extension. Zoom out. What's that, guys? That's the 38.2% retracement from its previous all-time high. See how price is reacting at this. That's double confluence. That's double confluence. That is a strong range. That allows for good risk to reward. And that allows you to know exactly what needs to happen before you get a big move to the downside. It's not likely to happen. There's more of a probability of you holding. Get that on. It's more of a probability of you holding this level than going to the downside. How can we add additional weight to our thesis? Bring in the indicators. Now, let me just clear this chart up. We know what the sticking points were. Now, we look at the indicators. The indicators give us an indication of overbought and oversold. So with the RSI, the actual RSI, that does something else as well. That measures momentum of buying and selling pressure. So you can get clues from the RSI, because as an example, if price puts in a higher high and then the RSI puts in a lower high, that's signaling a bearish divergence. That's signaling that the price needs to catch up. There's not enough selling momentum, and then you get a reaction on the back of that. And it works time and time again. I'm going to try and do that in crypto class, actually. I've got crypto class next Monday, and it could potentially be the last crypto class, guys, because I get 2,000 views, 3,000 views, sometimes 4,000 or 5,000 views on Cardano videos, Dogecoin videos, and that kind of thing. Get like 70 views, guys, on the tutorial videos, and it takes me like about 4 times more time to put, or 4 times more effort to put it into it to create those videos. So it could potentially be the last one. Crypto class, go and watch it if you want me to continue that. But what I want to show you on this is we're going from overbought to oversold. When we were oversold, we were down here. This is the RSI, oversold. Now, we went to extreme overbought. Let me just zoom in on this. This is indicating extreme overbought. You can see by the green shade in here. Extreme overbought, you're expecting a pullback. So this is where we were. We were expecting a pullback, and that's exactly what happened. So we got a pullback at this level. And then, in fact, what did we get? 46% to the downside to its extreme low of this wick, 46%. So that was a huge move to the downside. However, look where we are now. Oversold. Oversold. Look where we are on the RSI. Oversold. Look where we are here. Nearing oversold. Look where we are here. Oversold. Now look where we were oversold, where we are now in comparison to where we were oversold, where we were before. We were oversold here. Now we're oversold here. What's that doing, guys? Simple, simple, simple. Trend line. Adding in trend line, we're putting in a higher high. So because we're putting in a higher high, guys, as the indicators have reversed, that's signaling one thing. It's a higher probability that there's going to be another move to the upside. So how can we measure extensions? Let's do that next. So what I'm going to do is I'm going to stick my fib extension tool from the swing low to the swing high, and then I'm going to be pulling it back to the swing low, and I'm going to be looking for extension levels. Now I'm going to do things a little bit differently on this one because I'm looking for 1272s. I've got the 1272 on there already. So the reason why I'm looking for a 1272 extension is, firstly, the first swing was so volatile that I'm trying to be a bit more conservative. The second thing is the 1272 is 136% away from where price action is now. And the third thing, do I think that we'll hit the 1618 and the 2618 in one swing? Guys, I think we'll hit it during the bull run, but to do it in one swing, I think that's going to be a big ask. However, let's go through these levels. Let's go through these levels. So these are kind of mid-time horizon levels. You've got your 1-to-1 equal measure move sat at 66 cents. You've got your 1-2-7-2 extension sat at 77 cents. You've got your golden 1618 sat at 91 cents. And then shooting for the moon, you've got the 2618 at 132. So that's what I'm looking for projections, guys. But don't forget that projection is going to be over months rather than days or hours or anything else. If you did find this useful, what am I going to do next? I'm going to do a room video next, but I'm going to be start interacting with you guys a lot more. So actually get yourself in this Discord. If you get yourself in the Discord, there's all sorts going on in here. It's not, I'm going to give you a call. I'm going to tell you where to enter. I'm going to tell you where to exit. We do that, guys, but it's a community of like-minded people. Like-minded people, and each and every single one of these people in this community, guys, is a really nice person. Really nice person with goals and interests aligned with what we believe in. So get yourself on there. It costs you zero. Costs you nothing. So get yourself on there. Next thing we're going to look at is Forecaster. Now, I haven't done Forecaster for a few videos, but there's a link in the description below. And if anyone's interested in Forecaster, then you get 10% discount that I've negotiated for you. So the first thing that I'm going to do is seasonality. And remember, this thing works a lot better on stocks. You get so much information on stocks. And that's what my crypto plan is, to scale out of the crypto market into other assets, stocks, commodities, indices, things that are going to be less risk during times of hardship within crypto, because I know exactly what crypto can do in a bear market. Start off with everything, end up with nothing. Right, okay, so what I'm looking at here, guys, is the seasonality report. So I'm looking for a correlation on Dogecoin, and because cryptocurrencies haven't been around for long, then this is quite difficult sometimes. Dogecoin's been around a lot longer than most of them, so we can get a little bit from the seasonality. We've got the 3-year and we've got the 5-year here. We can just add in, I'll add in last year, and I'm going to add in the current year. And I'm going to look to see what kind of correlation that we've got and if the markets behave in any kind of similar way. So you look at last year, you've got a 65% correlation. It's not too good. You look at 3 years. Now, this is good and this is interesting. Over the 3-year period, you've got an 80.23% correlation. What does that mean? Over a period of 3 years, it's correlating quite high. So that means that we can look at this and we can look at clues as to what's likely to happen going into February. It's the 1st of February today, and you can see that we've pulled back into February. We've pulled back into February. This top one's current price action. This yellow one, the yellow one is what we're interested in, because that's the 3-year seasonality, and that's the one that has got a high correlation. So you can see that it's looking like we're going to push up during the start of February, could get choppy, but then when we start to get into March, things really start to accelerate. So is it going to play out like that, guys? That's just 3 years seasonality. That's something that we can build on top of our existing analysis. So hopefully I've painted a picture, guys. I started off with nothing. I've added in Fibonacci extensions. I've added in Fibonacci retracements. We've built in analysis on top to give us a thesis as, firstly, if we're wrong, where we protect ourselves, how we can protect ourselves with a limited amount of capital, and then where it's likely to go if we get extensions. Got Rune next, guys, so stay tuned for that, and I'll see you in the next one.